Welcome to HowStreet.com Radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com. You're coming to us all the way from Spokane today.
Yes, it's a beautiful day over here. It's crisp, but absolutely beautiful.
Yeah, one of those, I'm from the prairies, and I can tell you, it looks beautiful outside. You step outside and it's minus 49. It looks
really
great, but it'll bite your nose off before you know it. The last time you were there, you were at the Silver Investing Conference. Anything like that cooking there?
Well, no, they're getting, they've gone into hibernation till this time next year, but as you know, the metals prices are all over the board. They're a little quiet today, but I think we're going to see continued fireworks going into the rest of the year and into next spring.
Some of the other analysts I've talked to have said the same thing. Of course, we've been chatting since May, and you said that gold was the thing to be taking a good look at. It was on the rise, and of course, there's the bumper price that we've all been looking at, and it likes to tease us for a little while and then come back down. Do you think 1,800 is going to be the right price?
Well, it's going to be a tough nut to crack on the upside, but once it does, and I believe it will, it's just a matter of time, I think we'll see a challenge of the all-time highs above 1,900. You know, gold is really getting a lot more respect than it used to even a year or two ago. And this is coming by for several reasons. There are a lot more large investors that are moving into it. There are changes in the laws over in China, for example. Just a few days ago, China gave approval for bank-to-bank exchange of gold in trading. And sometime next spring, there'll be a silver exchange, an ETF in Hong Kong that'll be trading. And also, interestingly enough, in November, sales were released for the U.S. American Eagle gold coins. It was the largest sale of those coins in November in the last 14 years. So demand is really ramping up, and I think we're going to see a situation where gold has much, much more acceptability across a broader spectrum of individuals and groups than we've seen before in this bull market.
Several investing advisors have said that they're telling their clients now, make sure gold is part of your portfolio. I remember just a few years ago, they were telling you gold is passé. That shiny stuff isn't worth anything anymore.
At the beginning of the bull market in the early 2000s, there was a derisive comment that sometimes central bankers and others would make. They would say, gold is a barbaric relic. Well, gold has been around for 5,000 years, and it's proving to be just as important today as it was then. So I don't think you're going to hear that comment very much anymore.
Yeah, I remember somebody saying to me that gold was like, Confederate dollars. They looked pretty, but they were worthless. I think it's more than just looking pretty.
It certainly is something that's withstood the test of time the way it has across cultures and historic time periods. Anyone who's done any study of history kind of gets a sense of just how significant and important it is as an insurance policy first and as a profit center second. It kind of reminds me of a comedian who, in the United States, who passed away a few years ago. His name was Rodney Dangerfield, and his whole program of comedy was, I don't get no respect. And for a long time in this bull market, even though it's been rising for going on 12 years consecutively, higher price each year, gold hasn't gotten much respect, but I think it's going to become much, much more respectable starting right into this time period and going into 2013 and 14.
Do you think people still have a good chance then to step into the market and be in a position where they can take advantage of it right now?
I think so. And there's a saying that there's an old African saying that I like. It says the best time to plant a tree was 20 years ago, and the second best time is right now. So you're not going to get gold for $330 like you could have some years ago. But by the same token, the odds are very good, in my view, that we're going to see much higher gold prices going forward. And if you go into it after you've done your research and within your financial means and your ability to sleep at night, and you get, you don't overpay for it. In other words, you go to a place where the premium is not beyond what it should be. I think that people that do that will be quite happy going forward.
It looks like a lot of this is being driven by China. They've been encouraging their private citizens to acquire gold as well.
They are a huge driver in this. In fact, they've become the largest producer and I believe the second largest consumer of gold in the world. And so this is a huge factor. There was an interesting study that was made by the Casey Group here earlier in the week, and they looked at gold supply demand. And of course, the supply, even though we're much higher than we were a few years ago, the supply hasn't increased that much for all sorts of reasons, many of which you and I have talked about on this show before. But here we are at $1,700 gold, and we're still seeing supply coming out at about maybe 1% a year increase in the supply of gold, and so the demand continues to ratchet up. And then you look at China, who is having their demand, they're swallowing all of their own supply that they create plus their demand. If you back that out, you'll see that the supply that's coming on globally, minus China, is not really that much, relatively speaking.
And you were saying that China is the second largest producer of gold.
Yes, they're either the second largest or the largest, and so they are a huge factor, and they're not just putting it in the market, they're consuming all of it themselves. And as you mentioned, the Chinese government isn't just saying, we give you permission, they're encouraging their citizens to hold gold. Well, India has actually been trying to discourage people from buying gold, and the thing is, it's not going to work because gold and silver are just tremendously instituted in the psyche and the history of India, and so the demand is going to keep on going there regardless of what the government wants. This is where the people, I believe, are going to have the last word on this, just as they have been in Vietnam as an example.
And as we have found around the world now, when you try to keep people from participating in the market, I think the Arab Spring has actually spread around the world. People are a little more feisty about, gold in India. I remember watching a television show on National Geographic where in India quite often the women wear elaborate gold necklaces and other kinds of jewelry, and they're walking through a poor part of a city, and the documentary maker said, "Aren't you worried about being robbed?" And they said, "The one thing in India you can be sure of, no one will rob a woman of her jewelry. It's not just bad luck. The people around you will kill you to protect her." It's the way that culture has been for thousands of years. That's one place you just don't mess with.
Well, that's really interesting to hear, and it's just fascinating the role that gold plays in people's lives. And if you study it a little bit, and if you hold an ounce or two in your hand, it's hard not to find that kind of an energetic connection. And you start to understand at an intuitive level why gold has had such a fascination for people across cultures and time periods for thousands and thousands of years.
Well, and I don't think the average person realizes that gold is such a dense material. At the Royal Canadian Mint in Winnipeg, they tell you if you can pick it up by your fingertips, that bar of gold you see right there, it's yours. Well, it's about 130 pounds or something like that.
It's really amazing. It just has amazing properties. But I'll tell you one thing. I don't know if Facebook will be around in 50 years, but I'll tell you one thing. Gold will be, and it will never go to zero in terms of its value, and it will be as highly prized by people who understand its magic as it was thousands of years ago, and as it's becoming right now as we speak.
I'm always amazed when it takes a big dip in value, how those little, that valley happens, and yet we know the historic picture of if you hold it for longer than a few years, odds are pretty good you've made a good investment.
Right. And so it's just a matter, we've talked about this so many times on the show, whether it's any kind of an investment, your best chance to show a profit is to buy during weakness. And if you're going to sell some, sell during strength. And it goes against the grain for most people's emotions, but it's absolutely critical if you're going to have a chance of succeeding in any kind of an investment scenario.
Well, we all know that for the longest time, people were told, oh, gee, gold is not the thing that it used to be. Paper money is the way to go. It's modern times. But we were also told now by the analysts the euro crisis isn't going to be there just next year. This is something that's going to take a decade to get out of.
It's a long-term systemic issue both in Europe and the United States, and it's going to continue on and get worse until we come up with some kind of viable solution. And one of the big things that's going to drive gold, in addition to the fact that demand is increasing and supply is being constrained, is that there's a real question mark, and GATA and other organizations have been on this for years as to whether or not all that gold, or even a portion of it, is really in a lot of these banks, a lot of the central banks, because a lot of it's been leased out to make a few dollars, an ounce on it. And that lease, when that gold goes out, it's often consumed, and it's not going to come back. So they might get a paper amount back, but they won't get the gold itself. And I think when the day comes when people lose confidence that that gold is really there, that's when you're going to see a virtual explosion in the price from wherever it's trading at that point, with that realization, because it's all about confidence.
I didn't know until I talked to you that people would lease out gold. Here, borrow my gold for a while and then bring it back.
Yes, it's the idea of making a few dollars on it, on the interest on it, of leasing it out, and then the customer is supposed to return that to you. And what's happened is a lot of the banks will carry the leased out gold on their books as though it's actually there. So, for example, like if you loaned me $1,000, and maybe I'd never pay you back, hopefully it would, but you would carry it on your books as an asset, even though I had the money, and maybe I wouldn't pay you back. And so that's the strange conundrum that's going on here, because by definition, if it's leased out, they really don't have it until they get it back. It's not an asset at that point.
Well, we saw all these major banks in the U.S. and in Europe that looked like they were as solid as Gibraltar, and the next thing you know, the government has to lend them money because they're falling apart. In Iceland, by the way, something really interesting, he always said, gee, it's a shame they didn't jail the bankers who caused this. Well, that's exactly what they did there. The government said, we have jailed the banksters, like they were gangsters, and we have bailed out the people. It was cheaper to do that.
And look how quickly things turned around for Iceland. They didn't, they took the hard medicine, and they stepped up to the plate, and now they're back in a vibrant economy. So, well, if we had done that sort of thing a few years ago, we'd have had a lot of pain, but we'd be through the pain now. But unfortunately, the United States and the Europeans are not willing to accept any kind of pain, and they want to keep pushing it away and deal with the symptoms rather than the causes. And gold is going to be, for most people, is going to be a way to help deal with the causes of all these symptoms that we're seeing. It's going to help protect their wealth. Just a small amount can make a big difference.
David, I'm pretty sure these things are going to work out the way we have. We started chatting in May, and through the year, all the advice that you've been giving us for keep a sharp eye for that. Make sure that you don't invest in gold in troubled places, and I think that's going to be a bad position to be in if you're in South Africa right now. The labor troubles, they're not on the news right now, but are they? You're watching that all the time. Is South Africa still a hot spot that you might want to avoid if you're investing?
Things have quieted down there, Jim, but the reality is, and I've maintained this all along, that it's a systemic issue. It's a multifaceted issue, and it's more than just about how much the miners are going to get paid. It's the extreme expense. A lot of these mines, which are going deeper and deeper, cost more and more to get that ounce of gold out. And so South African production was declining for years before these labor troubles ever happened. So it's not just about the labor troubles, although that's a big situation. It's about declining amounts of gold that can be taken out at a profitable rate, and the same is true of the PGMs as well, too. So it's an ongoing issue that's not going to be solved there anytime soon.
And yet, the supply of gold, I know that there's the Cambridge property, I believe, in Ontario and Quebec that's going to be coming online in the new year, and they're expecting to get 1 billion ounces out of there. And I think 1 billion ounces, 1 billion anything, is hard to comprehend just how much that is. Is that going to have a big impact on the market when you have this huge new supply of gold come on, or is there enough of a demand to keep the price up?
Well, my comment is let's wait and see if that supply actually gets on the market. There's a lot of slips between the cup and the lip, as they say, and there are a number of big projects out there which are supposed to pump large amounts of metal onto the market, and they've run into all sorts of issues. So when it's there, and then we'll deal with it. But for now, we're looking at a situation where supply is constrained, and looks like it will be for the foreseeable future, and demand just keeps ramping up from a variety of different sources.
We'll keep a close eye on that as Santa gets closer to coming down the chimney. My guest has been David Smith. He's the senior analyst for the Morgan Report, which you can find online at silver-investor.com.